Hey guys, welcome back to another backtesting video, which is by far the most highly requested video type across the channel. So after a very busy summer holiday period and a burst eardrum, I've now got my hearing back almost, so we can get back to work. So yeah, I've picked certain months to showcase this strategy myself. I've also had other people, especially in YouTube comments and Instagram messages, pick certain periods requested, and I've done that. And I've also used on podcasts a random word picker, a random name picker for the month. And I've covered those too. But there always seems to be a month that's a sticky situation for some. So July 2023 was next on the cards. Now I know through experience that July 2023 was not the most fruitful of months for the Power of Two, right? But also adding in certain elements that we dropped in July, including the 4-hour momentum filter and well-priced theories, we can start to filter the low probability trades and the high probability trades and start to refine and learn from that process in terms of increasing our win rate, reducing our overall drawdown, and just finding a better level of consistency across the board. Remember, 1 month does not define you as a trader. Neither does a week, a day, a session, or an individual trade. Look at your performance over a quarter. So if you do, let's say, -2 1 month, you do +3 the next month, and you do +7 the third month, are you going to focus on the first month that you were -2? And are you going to complain about the second month that you were only +2 or 3? Like 2 to 5% a month over a year is very good. That's consistency. That's profitability. You're beating the bank's interest rates. You're beating your pension, your 401k, and most investment pots as well. You're beating all of that stuff. If someone said to you, I can guarantee you 20 to 25% returns if you hand me your money, I'll give you 25% back on top of the money that you gave me at the end of every year, you would snap their hand off. You'd be like, yep, there you go, there's my money. So don't focus on having to have above 10% every single month. Of course, the more pairs you trade, the more scenarios you trade, the more money you can make in a quicker amount of time, but also the quicker you can lose that money because you're increasing your risk exposure. So it is best to try and focus on the medium to high probability scenarios, the medium to high probability trade entries, and look at a 2 to 5% month consistency across the board, right? And limit the amount of pairs you're trading. So we're going to focus on July 2023 on just EU. Now, before I run through this, I'm not going to use bar replay for 2 reasons. The first reason is this will take me about 2 hours to do that, and you're going to not want to watch a 2-hour video. I know that for a fact. And I'm not going to want to record one for 2 hours because I know I'm going to make mistakes by doing that. If I was recording a week or a trade recap, I'd bar replay that happily all day long. But with this, there's a lot of information, especially with the filters that I'm about to add in and show that I've not put on my YouTube channel yet. So I've already mapped everything out. I've spent a couple of hours going over this period. I've annotated it on the 4-hour and the 15-minute, and we're going to run through hopefully over the next 30 to 40 minutes and go through the whole of July and see how we get on. So if we jump over to the screen, the first thing we want to do is look at our overall 4-hour momentum / trend, right? Now I have a key up here to help with this. So the 2 factors, one is momentum, right? Which we indicate with these dots. So green dots are a new shift. We need the second dot to confirm, for this case, the second higher high, a bullish trend, bullish momentum. You see here we get the first run, which is just could be liquidity, so we're not taking the first one, but a second one is confirmation that we've shifted bearish. This doesn't last for long. We shift back bullish again. You see the first high that breaks this one. And the second high ends up being up here, but actually is any candle after that first one. So we just would have moved this from candle to candle until we eventually got this extension, right? So that's momentum. The second thing is, if you've already watched my videos, is the directional bias. Now, I've not got them everywhere, of course. We're focusing on July, which is from here to here. But we need to factor in where we ended up June as well to start off that scenario. So with no follow through, which is essentially a reversal point, with follow through, which we get some in here, it's a continuation. We see it here as well, continuation. And strong follow through when we get those consecutive closes where you tend to get that momentum that price does not pull back into discount or premium. So adding those two together, those scenarios, to build a low, medium or high probability trade building scenario allows you to filter out, in particular, counter-based trades. So counter pro bias is where you are going to see a lower strike rate if you're just taking everything, right? Like I said earlier, if you take everything, there will be months and periods where you take home big gains. Like we're talking about big payouts, passing funding challenges, crazy times, right? But at the same time, the market does have drawdown periods in any strategy, not just ours, any, right? The market moves in cycles, probabilities, it's a numbers game. So just as much as you're going to have flat periods, you're going to have very fruitful periods, you're going to have drawdown periods. And there's no point in swapping from one strategy to another to try and avoid those, because you can't avoid them. It's part of the process. But by focusing on medium to higher probability setups, you are going to reduce the amount of drawdown period you're going to have, which is especially important, not so much in personal accounts because you don't have those drawdown limits, but if you've got a 4 or 5% max daily drawdown on a challenge, or a max 8 to 10% overall drawdown on a funding challenge verification or a live funded account, right? That's where the emotions come into play. So we're trying to eliminate that as much as possible, but also with the mindset that don't put one prop firm account or challenge on a pedestal. If you fail one or lose one, it doesn't matter. Even if you have to wait a couple of months to go and buy another one, if you are following the same strategy, the same rules, and focusing on those medium to high probability scenarios and setups and being patient, being consistent, you will pass funding and you will get payouts. Just like a lot of you watching this, I know you have. You've really gained some incredible payouts that you've told me personally you've never gained before on other strategies. And a hell of a lot of you have actually got funding for the first time, which you've never succeeded in before. But just because you may have lost a funding account or you've gone through a drawdown period for a couple of weeks or a month or so, does not mean that you're doing something wrong. Just go through your data, follow this video. This should provide value. That's the only reason I'm doing it. And just eliminate those drawdown periods. Even if it means you're taking home less percentage at the end of the month, what's more important, gains or capital preservation, right? You want to retain as much of your money first and then grow it after that, not the other way around. Anyway, I'll end up rambling for too long. So what do we have here? So this is our dealing range previously. So from here, we push down to here, right? Price pushes round end of June and we get an NFT, bearish followed by bullish. We also get a new fractal high. So this previous 4-hour range is now this one, right? So what does that mean? If we're bearish, because we've had a second low now, momentum is bearish, but NFT bullish means we've got pro-directional bias, counter momentum, medium probabilities. Medium probabilities in here because we've got bearish momentum and bullish bias. So if they both don't respond to each other, we've got medium probabilities. So we can look for buys and discount of this 4-hour range, and we can look for sells in premium of this range, right? So let's push down to the 15-minute. I know there's going to be a bit of this. And before we actually go into that scenario, you're wondering, why is there lines all over your chart, bro? Well, I don't normally look at the screen like this, but for the purpose of this video, just to show you how much red folder news was in June. One line for every red folder news event. Look how many of them are, especially at the end of the month. So we have a rule at Evolution that we don't trade right on or like 15 to 30 minutes, even an hour before a red folder news event, regardless of whether it's restricted to prop firms or not. Because if you literally enter on a red news event, you're probably going to get some kind of slippage. You might not lose your account, but if you're risking 1%, you might lose 1.5 or 2%, which is going to mess with your account, your results, your risk management, your emotions, everything else, right? And of course, if it is a restricted news event, and I've labeled these, you'll see them when I zoom in, we want to avoid those almost completely, right? We want to wait till afterwards, then trade them afterwards, ride that wave, unless price actions completely So we've got to factor that in. Now, here's the NFT. So we're looking for buys and discount, sells and premium of that range, right? We can see obviously everything that happened, but again, this would be an absolute marathon of a YouTube video if I was bar replaying this. I want to provide as much value as possible here and as much detail. So this gray box is my 15-minute external range. If we get a sweep of the external range, it's a trade, right? If we have a sweep of an internal most recent fractal, like this one, it's a trade, yeah? Those are two entry models. If we have either of those two things, like we had a sweep here, and then an extension, we have an extended sweep, which is the third entry model. There's your three entry models. Now, we've got these two lines here. I know when I'm zoomed in. Let me zoom out a little bit. Might be hard to see me draw on this. This is our 4-hour high. It's our 4-hour low. It's our dealing range. Anything in this central area is essentially not well priced. It's trading too close to the EQ, where price tends to accumulate and chop around. Even on this, you can see chops around, accumulates, and then does something. Even in here, right? Chops, 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 and then busts through. What happens over here? It swings in, out, back in again, chops around, and then continues. Do you really want to be in trades around the EQ? Yes, again, if you take everything, there will be good periods where you'll take maybe 9% in a week. That's great. But if you keep doing that over a long enough period of time, there's no guarantee that you will, but it's also still possible that you will see 6, 7, 8% drawdown periods in a week or a month. And you don't really want to be doing that because for most of us, you know, we're all human at the end of the day and emotion rules. You're going to get very emotional about that. So let's try and regulate those emotions as much as we can. So we want to be looking for trades, shorts in premium, longs in discount, and away from the no trade zone, right? You should understand that now. So I've annotated these bits. This here, we can see 15-minute range, most recent internal fractal. It's well priced. We get an extended sweep. We get an extended sweep again. The bearish candle is actually the entry. It's inside London session. And we get a tag at 8:15 UK time, there or thereabouts. It's a 3%, it's a winner. It's a counter no follow through, but it's pro momentum, which means it's a medium probability focusing on the trade matrix, right? 3 to 1, straightforward, really simple. It doesn't matter that the TP is in no trade zone. The no trade zone is we want sweeps out of it and entries out of it, right? The next one, right? Now this is technically valid, although complete transparency, the tag happens outside of kill zone by what, 27 minutes, something like that. So if your kill zone ends at 3:30 and you have a hard rule that you are not executing any trades, and if you have a pending order set, you remove that order at 3:30, bang on, then you won't take that trade. Also, if you have a hard rule like I do of maximum 1% risk exposure on one pair, one trade idea at the same time, you wouldn't take this second trade if you were already in the first. All right. So I'm not including this in the results, but I just wanted to showcase that in there, and I'm now going to delete it. It's still a medium probability trade, but like I say, the tag is at like 357 or something like that. It comes very close to being tagged. Anyway, next. So a 3% up, right? It's one trade, 1 week, we don't care. Now, we push into discount. We're NFT bullish, we're looking for buys. There's no news down here. We get a large inducing candle here. We do get a sweep. What is that sweep? Let me just have a look. So where was our 15-minute range heading into this? Looks like I might have marked it as an internal range sweep, but it could be an external actually. Yeah, this is an external range sweep. So it's this one, right? But if you were to enter that, where's the entry? The sweep's in discount, nice. Can you get a 3 to 1 to the high? You can't anyway, right? So these are the rules that invalidate a trade. There's three things. The entry's in no trade zone. The second thing is, your stop loss is over 20 pips. For EU and dollar Swiss, we use a 20 pip maximum stop loss rule and have done for about maybe 3 months or so. The third thing is we need a TP on an NFT and an FT before the high or the low. We can get a 2.43, even with an inaccurate 22 pip stop loss. So that's invalid anyway. All right. Then what happens? We push up and let me delete that one. Remove that. And we get a most recent internal fractal sweep inside New York. But although the sweep is well priced, the entry would not be. The entry is inside that no trade zone. 9.7, you ride it up to 10, you'll have 11. If you were happy to trade this, like I say, you are opening yourself up to more opportunities. That's a winner. And I'm not counting this because that for me is invalid, right? So some of you, there's always a percentage of haters, right? Some of you will say, oh, you tweak your numbers. There's always trades that you'll miss, but they're losing trades. No, I miss winning trades too. And my community tend to know what trades I don't take out of preference or because I'm in a meeting or busy, which is again, my own fault. But they'll know that before it hits stop loss or TP. Go and ask them, right? So you're not always going to take every single losing trade. You're not always going to take every winning trade either. It is what it is. Right. So now we push below, we get a 4-hour range low breach. And I'm going to do the rest of this as much as I can on the 15-minute, because when we zoom out, we can see the ranges, we can see the interactions. This is our 4-hour range previously, high, low, and we get another interaction. We get a no follow through, right? So it's pushing higher. We get another no follow through. Momentum's still bearish, no follow through bullish, but still medium probability trades, right? So what do we get inside here? We do initially get inside discount a valid sweep. This would be our 15-minute range. So it's an internal sweep, right? So you place an order on that and you'd be happy. You'd be like, yeah, I can get 3-to-1, stop losses 12, 13 pips. However, without tagging you in, we get an inside bar and then a push lower, which invalidates the trade, right? The inside bar doesn't invalidate the initial trade, just further sweeps because there's no fractal there, it's just a wick. And then we get no sweep, so it pushes higher, right? Pushes back into premium. There's no sweep in premium during New York of the highs. We push lower, we get news. We get services PMI. But we get an extension of this sweep after news has calmed down. We're not entering just before or just on, but like 45 to 30 minutes after a news release, price action is calm. The water's calm, you can enter, right? So this is an external range sweep. That's the high, that's the low. I draw a line on here to show that's the fractal, which is well priced. You see that no trade zone there? This is down here. So it's well priced. We get an extension and another extension. We place the order. Now this one, again, tag is 1549. Just like that second trade, if you have a hard rule personally, that if you have an order pending buy stop in this case at 3:30, but then you're thinking, well, I don't trade anything after 3:30, you either won't put the order on or you'll delete it, right? If you're happy to leave it on, there's nothing wrong with that. That's something that you have to test, not just in a back testing market, but in a live market as well. That's why I say you can't really come on board to a strategy and think 30 days, I'm going to watch all the videos, I'm going to learn all the concepts, I'm going to have all the questions answered, I'm going to do all my back testing, and I'm going to get funded and make loads of money. In 30 days, come on. It's going to take you 30 days to watch the videos and think up some questions to ask me, right? So you've got to give yourself at least 3 months in anything, even if it's someone else's community and a different strategy. Don't do it for 30 days. It's like joining the gym and expecting to have a different body in 30 days. It does not happen, right? So this one I'm not including in the results because for me, I have a rule where I don't have tags outside of kill zone, right? But I just wanted to add this in there in case you do. And it's a valid trade. It's a medium probability. Momentum is bearish. Directional bias is bullish. News has passed. It's okay to trade, but tag is outside of 3:30. So we remove that. I'm not including that in my personal results. But when you're back testing, it's a good idea to look at everything, every scenario, label it, collect the data, and then later on you can go, oh, so what if I remove this? And what if I add this in? Or what if I focus only on those? What if I take this away? What if I add that? Because you've already got all the information, you don't have to keep backtesting the same 12 months over and over again. You do it in detail once, and then every time on top of that is just a refinement which takes a quarter of the time, right? So what do we have next? Let's zoom out a little bit. Okay. Highlighted here, we've got NFP Friday. So we don't really want to be trading just before NFP. NFP Fridays as a whole are pretty low volume until the actual news event. So there's a lot of people that just don't trade them. And it's a day that I and the coaches at Evolution Markets were more than happy to just take the whole day off from trading and focus on other things. If we look at it in terms of this, there is no setups anyway, because if you've got no follow through and you're looking for buys, you want it down in discount anyway. It doesn't even reach discount. There's an arrow down here. We're not buying in premium after a no follow through, bullish, right? And if you're looking for sells, there's no sweeps to the upside anyway. There's no valid sells in there. And even if you were looking to sells, I mean, there isn't any setup, but if you were, you don't want to be entering trades too soon, too close to non-farm payrolls, right? And you can see why it just explodes to the upside. So this is the move that starts off the possibility of a bullish momentum shift. We get 2 consecutive 4-hour body closes, which gives us strong follow through to the upside, which means we're looking for momentum, and we can take buys in premium. So let's just go back to the 4-hour just to have a look at this. Strong follow through here, right? So I don't have a range marked up. There's the low and here's the high. We can see price does not push back into discount before continuing. This is exactly where strong follow through came from. It's momentum. Same thing. Well, let's follow through up here, but same thing here, right? We get strong follow through, momentous candles, comes back to the EQ, not discount, and then takes off. So nothing, no strategy or indicator guarantees entries every week, right? But it shows over a large enough sample size that we can ride that momentum. So let's go back down to the 15 and have a look here. Now, I can look for sells here as a medium probability scenario following the trade matrix because momentum's still bearish, right? We haven't had 2 4-hour higher highs yet. So you can see we've got a sell position here, which is a -1. This gray box is a large 15-minute external range. So it's an internal most recent fractal only inside London kill zone. The stop loss was 17 pips, maximum's 20. It's valid. There's no news that day. So we're good to go, right? Yeah, okay, you can see that as a typical retail impulse correction. You're looking for an impulse, but a lot of the time it's more to it than that, right? That's why we don't just trade patterns. So with this, we looked at a sweep. We're thinking medium probability, we'll take that. And that could have easily rolled over to the downside, at least short term, right? And we could have had prices into discount to take buys, but obviously with strong follow through, you don't always get that. But do we take that loss into consideration and go for a long walk in the rain crying about that 1% that we lost? No, because there's always opportunity around the corner. We take a buy next. Because with strong follow through, with that pro bias, we can take buys, like I say, in premium. We can take them anywhere. We don't even use the world price. There's no trade zone. Even if a sweep and an entry happening there, we'll take it with strong follow through. It's a medium probability. Why? Because we're counter momentum, but we're pro directional bias. It's the second one on the list. So we're still inside this 15-minute external range. We get a sweep of a most recent internal fractal inside New York at around 1 p.m. And then the entries down here about 2 p.m. We get a really nice tight 6-pip stop loss and a 3-to-1 even before the 4-hour high for increased probability of playing out. So that was nice. We get a 3%. So not including trade 2 and 3, we got a 3%, a -1 and a 3%. So we're up 5% now, right? And how long is that in? Where did we start? July around here, right? So we are 1 week and 2 trading days. And we're up 5%. I know some people that have a 5% monthly profit target. And like I said at the start of the video, if you're making 2 to 5% a month, that's good. That's profit. You're already beating 95% of traders that end every month minus 30, 40%. And we've all been there. Like, I've been there too, right? That's part of the journey. So we get strong follow through. Again, we're pushing higher. Let's go back to the 4 hour. Let's have a look at momentum. Where is this shifting? This was the most recent high. This was the most recent strong follow through in range. We sold and bought in here. So we've had one push. So we have this one push. We're still bearish in momentum after that one push. Why? Is it a two push rule, you could say, 2 high highs or 2 low lows? Because one can easily just be a liquidity grab, because every time frame needs to take liquidity, right? And we never know when that's going to happen, but it's all time frames are going to take it at some point. So this could have easily been a 4 hour liquidity run and then continuation to the downside, taking all this liquidity, right? We don't know that. No one knows that. So we get another strong follow through. It pulls back. We're looking for buys. If momentum is still bearish and strong follow through is bullish, we're still a medium probability scenario, right? Back down to the 15 minute. Remember what we're looking for. Looking for news. We're looking for other confluences that will keep us out of the trade. This is something that you want to build into your trade ideas in the morning. What do we have here? We have a 15-minute fractal range sweep, external, but before kill zone. This is outside of kill zone. Happens at like 7:15, 7:20, something like that, right? Our kill zone starts at 7:30. So we're not looking for sells there. Sells would be medium probability because it's following momentum, right? But we're looking for buys. What do we get here? Well, we get a 15-minute external fractal range sweep to the lows. It's strong follow through, so we can buy anywhere. But look at this red line. What is it? It's not restricted news. You're not going to get your prop firm account taken off of you for those prop firms that have restricted news violations like FTMO. But if you're looking to tag right on the news, that's not good practice, not good risk management, right? And this is an extended sweep. So we get a sweep here, we get an extension. So you'd be literally entering on the candle where the news is about to release. I wouldn't do that, right? Even if that was a winning trade, I'd highlight the same exact reason. This is rule-based, right? So it pushes lower. We get a sweep of a fractal here, okay, but before kill zone, so it's not valid. No more sweeps of the lows down here. No sweep of the high. No sell here, no sell here. And then overnight pushes, and we get a new 4 hour interaction. Now, there's a lot of detail in here again, which is why I've not used bar replay. This would have taken 15 minutes on its own to bar replay. NFT to FT, we get no follow through initially and then follow through afterwards. Once it's follow through, it cannot change. No follow through can shift to follow through. So we get unconfirmed bias first when it breaches, but that's very early in the morning, it's before even London. So we get unconfirmed, we're waiting, we're not doing anything. We're actually not doing anything during the whole London session, which closes at 10. 10 a.m. we get confirmation of no follow through, which is essentially, without even me looking, is a 4 hour wick, right? So we're looking for sells at that point. You can see we're outside a session, we're not looking for sells. Then we get a restricted red folder news event, core inflation rates. Again, you don't want to be entering trades. There is a fractal low sweep, but it happens outside of kill zone anyway, but you shouldn't be looking for trades. You'd just be saying, okay, well, it was unconfirmed during London and New York. We've got high impact restricted red folder news. I'm not trading till tomorrow. And you come back the next day. See, well, that would have taken me 15 to 20 minutes to explain on bar replay. So we're pushing forwards. We've got follow through. Because we've got follow through now, we can only wait for a pullback and buys from discount. We're not buying in premium. It's not strong follow through. It's follow through. Also, in terms of momentum, you see this green dot? That's the first bullish push. Once we break that, we've now got our second bullish push. Sorry, not that one. Let's go to the 4 hour. You see that line I drew? So the first push was still bearish. We want confirmation from a breach of that. As soon as we get one candle that breaches that, we've got a second higher high. We're now bullish in momentum. So if we've got bullish momentum and bullish directional bias, that means that sells here, counter follow through, are low probability. You can take them because over a larger sample size, if you did not have a max daily drawdown of 4 or 5% or a max total drawdown of 10% on your account, I would be more risky. I'd be taking all of these, but I'm trying to teach a strategy that allows people to get funded and then reach payouts. And I'm doing that, right? Now that we've got to that stage, it's about, okay, now let's limit the amount of exposure and drawdown our traders are now having and just giving more value, just restricting that with the filter. That's what it's doing. So let's go back to the 15-minute, knowing that we're only looking for buys. And if you were looking for sells immediately from premium, obviously, and premium would be anywhere because you'd be extending this 4-hour range anyway as price moves up, right? Until we get a 4-hour fractal breach. But we can see the next day after Asia, what have I marked on here? If you are selling here, you are trading against bullish momentum and bullish directional bias. It is a low probability trade, right? So me personally, I wasn't taking those positions in July because I already had that factored in. And that's while I was compiling, okay, let's release this 4-hour momentum filter, which wasn't scheduled until August, September time, but we brought it forward to the end of July to stop our traders from taking too many counter trades that are lower probability, which clearly are going to statistically over time see a lower win rate. So there are some trades in here. If we're going to take every valid trade, right? What do we get? Here, this might be a tag outside of kill zone. We get an extended sweep here, inside kill zone. We're in premium. This was a 9:45, could potentially be a 10 a.m. sweep. Entry, sorry. It might be a 10 past 10, a 10:15 tag, maybe. So again, just like the winners earlier that you wouldn't put in because they're invalid outside of kill zone, this could be an invalid loss based on the tag. But that would be a loss that you would have avoided if you did leave your entry on. Here next, what have you got anyway? You've got, it's not restricted news, PPI, but you do have a red folder news event, which does give this doji, so it slips on both sides. So you'll be careful of those. Do we get another entry? I believe we do. We get a fractal high here. Inside session, we get an extended candle, which tags in with the next candle, even with a couple of pips buffer, you're going to get tagged in and tagged out. It's a low probability trade. You're fighting against momentum. Like the expression, trying to catch a falling knife. This is the opposite direction, right? You're trying to catch a throwing knife. You want to limit your exposure. So there's 2 losses. 1 or 2 losses that the 4-hour momentum filter has filtered out. It's done its job. Right, so now we push up here. Again, we are in premium of a large 4-hour dealing range with follow through. We only want to be buying right down here. So when price is up here, we're not looking for buys. And according to the trade matrix and the 4-hour filter, we're not looking for sells either. So we wait for the next interaction, which is this no follow through. And that's where our momentum, our swing point ends. We're trailing this all the way up until we got a new fractal form breach, right? So momentum's bullish still. Now let's have a look at directional bias. Directional bias, we get no follow through. When do we get no follow through? We get it at 10 a.m. It's unconfirmed until. So even though there is a fractal sweep in here and you could say, oh, there's an entry here, 11, so give it 12 pips, give it 1 pip buffer, just over, round it up. Can you get a 3-to-1 to the low? Potentially. No, just outside of anyway, so that would be invalid. Very, very close. Some of you might be thinking, oh, what if I just did a 2-to-1? Yeah, but then you're messing with things and you're breaking your rules and there's inconsistency. So I would stick to things. But with this, it's not confirmed till 10 a.m. anyway. This is, again, when you're back testing, you need to really take your time. Like it took me a good 2 hours to go through all this before the video to make sure I wasn't making any mistakes. And I had made a few mistakes and I went back and I went over it again and I was like, okay, that was outside of kill zone. This was before kill zone. Okay, there's news here. And just take your time with it, especially when you're looking at the 15-minute, because it's hard to see when your direction or bias was actually set, was actually confirmed. So we're not trading London at all. Our dealing range at that point was here. So we've got a no trade zone in between. Zoom in a bit. So for New York, we'd be looking for sweeps of the high for sells, TP before the range low. We don't get that. Then, in fact, sorry, we had a 4-hour low right here. So this range, correction, I might have dragged it accidentally there. That's the 4-hour range here, much smaller. So we get a breach of that and we move that out of the way. That would help. Interaction of the 4-hour low now. So we get a turnaround, unconfirmed during New York, you can see, which becomes the 4-hour wick here. And we don't get confirmation of that no follow through until 6 p.m. So there's a whole day that we're sat on our hands with EU and not doing anything. Just like today, it's 26th of September, and the whole London session at least, all 3 pairs were unconfirmed. So we're doing other things. I was doing this. So then we're overnight, we breached the 4-hour high again. We're unconfirmed until 6 p.m. And then we're moving in, 6 a.m. We're moving into London. We get no follow through with a new high again. So it's still bullish in terms of momentum. No follow through 10 a.m., which means no trades during London. So again, if you're looking at this as a most recent fractal sweep or a 15-minute external range sweep, it's both. We get an extended sweep like this. And if your range low is down here, you can get a 3-to-1. Yeah, but you're trading before the confirmation. And if you want to do that, then do that, right? Because if you get an NFT like this to the downside, looking for sells, if we do get a slight breach, let me draw this on. If we then get, let's say that's a fractal, if we get a breach like, if that was during kill zone, I'll take that. I will trade that myself. But that's more advanced. But the fact that this then pushed higher and higher again is just pushing and pushing. It's like, how long is a piece of string? How long are you going to keep selling this? Again, it's like going too far off rules. You don't want to be doing that. You want to stick to the rules as much as you possibly can. So even though, yeah, there's a 3-to-1 in there, it's invalid for me. So I'm not taking that. And then New York, what do we get? We got red folder news. We get retail sales. It's restricted news. Don't be greedy and impatient and have your funding account taken off your hands for a violation of rules. Just don't do it. It's not worth it, right? Right, a lot of information over here, so concentrate. So after the news has died down, what do we get? We get a sweep. We've got no follow through to the upside, which means we're pro-directional bias is short, but momentum's to the upside. So medium probability we can buy. We can buy and sell as long as we're in the right zone. Now there's 2 things here. First of all, like I've marked, cannot get a 3-to-1. Let's just prove that. 16, so move it to 17. Can we get a 3-to-1 before the high? No, it's 2.5. Also, the tag is not in well price zone. It's just in that red zone, that no trade zone. So there's 2 reasons there not to take that trade. So where are we now? This is the 4-hour dealing range. We're still no follow through to the upsides. We're still looking for sells. But you can see price does not enter that premium range. It gets to the EQ. And this is where you could be like, okay, well, I can take trades around the EQ. Yes, you can. But if you were taking all of those, I mean, first of all, that tag would be in discount anyway, but you would likely get a loss in there anyway. So it just shows again, when price is around the EQ, it's just kind of like hovering around it and chopping around it before it continues. You want to kind of stay away from the EQ of the 4-hour ranges. And in a lot of cases, the 15-minute range as well. That's why the external 15-minute range will hold a higher strike rate than the internal range because you're getting in at a better price. Right, what happens in here? We've got red folder news, building permits. It's not restricted, but it's red folder. There is a sweep right bang on the news release. Don't trade right as the news is released, right? You know, you're going to get slipped. You might not get your account taken off of you, but you're going to lose more than what you calculated your risk to be. Even though this would have been a 3-to-1, right? It would have been a losing trade, but you don't want to be trading right directly on news. It's not advisable, right? Then what happens here? So we get a sweep of a fractal during New York, but it's not in premium. Premium's up here. We've got bullish NFT. We're looking for sells, but we're not looking for sells, no follow through in discount. It has to be in premium. Then we get a 4-hour breach. So let's have a look here. What we got? We get a push lower. First lower low. In terms of momentum, we'll zoom out a bit. Don't lose sight of where momentum is. Again, that's why, again, you've got to take your time. And again, why I didn't use bar replay on this. We'd still be over here by now. So that's the previous low. And you would draw some kind of a line. Something that you can put an alert on, right? So you've breached that low, but it's only the first low. So we're still bullish momentum. That could easily be a liquidity grab. That could easily just do this and take off, right? Because we don't know for sure. That's why we use a second low for bearish momentum. Second high for bullish momentum. So what do we get here? So we get a breach of the lows. We get NFT confirmed at 6 p.m. We're not trading in there anyway. We know there was no trades during New York. Pushes high, we got London open here. This is our 4-hour dealing range highlighted, right? So if we've got no follow through, we can look for buys and discount. And where's our momentum? Our momentum is still bullish. So we're only looking for buys and discount. We're not looking for sells. There's actually no sweep of the highs anyway. So there is no valid sell setup technically, even low probability. But let's have a look in this. Does the well price theory save you from a loss? Looks like it does to me. There's no news, so you would take it. But the entry is in that no trade zone. Can you get a 3-to-1? Let's have a look. 7.6, so round it up to 8 and give it another one, give it 9. Can you get a 3-to-1? Yes, you can. But the thing that avoids that trade idea is it's in the EQ. Again, it's exactly where price tends to chop around before doing something, right? And you're seeing that in this one video. You're seeing that pattern emerge. That's why we came up with the well price rule, to filter out lower probability entries. The 4-hour momentum filter is to filter out lower probability trade ideas. The well price rule is to filter out lower probability trade entries. Add them together, saving yourself some money, right? So that pushes lower and we get a breach of this low. And as soon as we get a breach of this low, even that first candle, momentum has shifted bearish, right? It eventually creates a low down here. And then eventually we push it down here. It'll make more sense when I show you the 4-hour. But as soon as that low is breached, momentum is now bearish, right? So if you're using the trade matrix, we call it, you want to start looking at that now and align that with the trade building ideas. So initially it's no follow through. Then it becomes follow through, just like earlier on. This actually all happens overnight. Now there is a valid trade in here, but low probability. First of all, let me show you this. As you know, that was the first lower low. As soon as we breach that, we get a second lower low. We're now bearish. We're now looking for sells following market momentum and trend, right? Then we get this, you could call it stacking sell side liquidity, which again, we don't trade retail patterns, but if you're more experienced, you'll know that likely price is going to take that liquidity at some point. But if you're just following the rules around momentum and you're saying, okay, we have follow through bearish, which means I need to sell from premium up here, which price never comes to. And if I'm considering buys, I know that I'm against directional bias and I'm also against momentum. So does that mean it's a high or medium or low probability trade idea? It's a low probability trade idea. If I zoom in here, there is a valid low probability trade, just like I've marked here. And when you're collecting data, collect all of this information. Collect it all. This is your 15-minute external range. So it also happens to be internal, which again holds less weight. Most recent internal fractal sweep inside kill zone, and it's an extended sweep, extends lower to this candle. Round it up to 7, give it another one 8. You can get a 3-to-1, of course, because the 4-hour range is way up here. But that's pretty much a quick tag in and tag out. There's no news, so you could have taken that. But knowing it's a low probability, it's counter directional bias, it's counter momentum, it's a low probability trade. Right? Add it into your data collection, but try and avoid them in a real live market situation. Right, then we breach the lows, we get no follow through. We get a low follow through with this 4-hour wick. You can just see it on the 15-minute. That confirms at 6 p.m. it pushes higher. What do we get? The following morning, London Open. We've got some high impact red folder news. We want to wait for that to pass. So we basically get a liquidity sweep. That drops lower. We're waiting for confirmation here after that news release has passed. So we've got no follow through to the downside, which means directional bias is bullish. We can look for buys short term. Momentum's bearish. So if they're not in alignment with each other, it's a medium probability scenario. Pro-directional bias, counter momentum, medium probability. Happy to take those. This is a losing trade, right? So let's have a look at this setup. How did this come about? Where's the 15-minute external range? It's still this whole thing. Again, it's a most recent internal fractal sweep, which holds slightly less weight over an external sweep. Keep saying it, keep seeing it. So inside kill zone sweep, it's well priced, it's in discount. We can get a 3-to-1 before the high. Stop loss is 9 pips with a buffer, so it's 8 to the candle, is it? Yep, so we got 9 there. Even with 10, it doesn't really matter. It's a losing trade, right? It's just a valid losing trade, right? And we move on. We're looking for buys in here, but we get a new interaction with a fractal low, which initially was no follow through, but that happens overnight. We get no sweep in here to the upside, and the sweep to the downside, that most recent internal, there's 2 things that happens here. 3 things actually. Again, let's not rush it. First thing is, it extends lower. When it extends lower, it also takes out the range low. The second thing is, it confirms. In fact, move that one over there. The first thing is, it extends lower, and it does so during a high impact news release. It's not restricted, it's a red folder. That's the candle that you'd look to trade from. So just like earlier on, would you be happy to do that? If you said to someone, if you said to the bank, I want to place this bid and I want to risk 1%, and the bank says, okay, I hear what you're saying, but you might lose 2%. Are you okay with that? You'd be like, no, that's not what I asked for. So you don't want that unpredictability in trading, right? So then after 10 a.m. we get confirmation that it's follow through. So it switches from no follow through to follow through. So technically it's an internal range extended sweep. It's valid in discount, no follow through, bullish. Okay, but it happens bang on a news event. There's no hiding from that. It's red folder. Don't trade right on them. If it was a couple of candles afterwards, happy to take it, but not right on the news event. Okay, so we're follow through now. So this is our 4-hour dealing range. With follow through, we're looking for sells in premium, right? When it's bearish. Also, momentum's still bearish. So we've now got a high probability of playing out, right? Let's have a look here. So pro momentum, and this is what's wrong. That was a high probability. Excuse me. There we go. Remember, pro-directional bias, follow through, sells in premium. Pro-momentum, we are bearish. You can see. Lower lows, lower highs. There's the first low, that green dot. There's the second one, the second green dot. So even high probability trades can lose. All right? Get used to it. What is the entry setup? If I just have a look in London as well, just because you're looking at this and you're probably thinking, well, there's some fractal sweeps in London. Yes, there is. That's valid. Would I have an order on there? Yes, I would. I'd round it up to 11 pips. Can you get a 3-to-1? Yes, you can. But it pushes higher, right? So it invalidates. It doesn't tag you in. We get another fractal sweep right here. I'm duplicating everything now. Would I take that? Yes, I would. Let's have a look. There's no news. Put a sell stop order on there. 11, so round it up to 12 pips. Can you use 13? That's fine. You can get a 3-to-1. Yes, you can. And it breaches higher outside of kill zone. So you would be invalidated and not taken into either of those 2 trades. That's why it's not there. So then New York, where's our 15-minute range? It is here. Here's another internal. So again, take internal range sweeps, take external range sweeps, take extended sweeps, collect all the data. We've seen here time and time again that the internal most recent fractal sweeps hold less strike rate during the month of July at least. Do that over 12 to 24 months and start to collate. You might decide I'm going to trade high and medium probability 4-hour scenarios only, and I'm only going to trade 15-minute external ranges and 15-minute extended sweeps. Now you're filtering things to suit your needs, your risk appetite, and based on your trading results. So the other thing that I added in here, which may or may not be a factor, this is depending on you as an individual, and it's hard to decide for in a back testing scenario, right? But if you've got the Fed that's about to drop an interest rate decision in, I think, 4 hours, yeah, 4, nearly 5 hours, would you enter a trade? It is a difficult one. Like, I would say our average TP is about 5 hours. So we are within that time, 4 to 5 hours before the news event. It's close. It is very close. And I'm not going to say I would take it. I'm not going to say that I wouldn't take it because I can't speak for myself in that situation. But at least I've got that detail in there, and you've got to think to yourself, if I've got a high impact news release that's also restricted to FTMO and other prop firms, would I take it with like 3 or 4 hours to go, knowing that my average TP takes about 5 hours? Maybe or maybe not, but I'll leave that trade in there for a -1 to save argument. So here's our 4-hour swing point, which takes liquidity over here only by 1. And then we get a couple of news announcements that just take that lower. So basically the Fed's interest rates decision comes up, takes liquidity, and then continues momentum to the downside in a short story. And up here we can see, okay, there's an extended sweep as well. Just want to outline this if you're thinking, why did he not take that? Again, yes, it's valid. Yes, you could put an order on there. Same exact thing again. If you are 4 hours away from a high impact news event that's restricted, are you going to enter that trade? Maybe, maybe not. But this would have been a no tag anyway. It would have extended to the next one, and then extended to the next one, and then you're way out of kill zone because that doesn't tag in until 10:15 to 10:30 a.m., right? And then you've got interest rates decision and GDP growth rate. You've got loads of news releases around here. Anyway, we get a follow through. We get a large momentous move to the downside, which does make sense because momentum is bearish, right? And momentum has been bearish, confirmed, according to our rules, for now a trading week. 6 days nearly. So if I just squeeze out a bit, and you'll have to ignore all this detail, this is our 4-hour range, and it stays within this 4-hour range now until August, right? So if we've got follow through, bearish, that means we only want to be taking sells from discount, right? All of this region here. I'll even just make it a bit clearer and say, anything in that gray box will sell. Do we want to be taking buys against bearish follow through and against momentum? Well, that's up to you, but that would be a low probability scenario, right? So let's have a look here. Also, you've got to factor in the news releases. There's loads of news, red folder news in here. So let's have a look here. There is a valid counter low probability trade, which by the way does play out, but your entry would be 15 minutes before growth rate. So again, I would advise against doing that. And also I would advise against, unless there's additional stacked confluences in that particular situation, I'd advise against low probability trades. We get a nice fractal sweep inside kill zone here, but the sweep happens in discount and the entry also is not well priced. So there's no valid trade there. Just like I said, we're only looking for sells in premium, and there's red folder news. Use these arrows, it really helps you in your back testing and live trading. If you stick an arrow on there, you know where your bias is. Again, this is all discount. We're not looking for buys. It's very low probability. There's no sweeps to the downside here anyway. No sweeps to the downside here. There's one here. counter follow through and counter momentum. It's a low probability trade. And again, that 4-hour filter saves your ass from another loss, which some of you watching the video may have taken. And I don't blame you, because it's still valid. It's still the power of 2. It's still on there. You can still take it, right? It's just a low probability. Just know what the likeliness of your trade scenarios are going to be before you take the entry. If you take all of them, just as a reminder, I've said this about 3 times in the video now, if you take all scenarios, you're going to go through periods of significant gain, but you may also give yourself significant drawdown periods. So that is not a buy that I would take, low probability. And then there's a sweep here of the upside, happens actually in discount. If you had an EQ, a 50% midpoint, it would be here. So it actually happens in discount anyway. But yeah, sweep and entry point are not where they want to be. And then we hit August, 1st of August over here, right? So let's just zoom out now. Didn't mean to just draw all over the screen there. Right, let's calculate where we're at. So this is a slow month, it's a dry month, right? But we're looking for reasons and rules behind everything. And you can't say I haven't repeated myself over and over and over again, week after week, day after day, session after session, right? This isn't made up. This is rules that I've added in to create the strategy. Now we've just added in filters to allow you to retain as much capital as possible, to reduce your risk exposure of drawdowns. It will cap the opportunities as well, but that's what risk tolerance is. You're either going risky with maximum gain, or you're being more conservative with a more realistic outcome. That's life, right? If you're going to start jumping into a shallow pool from, 20 centimeters, you're probably not going to injure yourself, but you're also not going to get any stickers or certificates. If you jump off a 100-meter high cliff into stormy seas, you're risking your life, but you're going to get a round of applause. You've got to find some middle ground here. Do something that's not so risky that you're putting your capital at absolute risk in your emotional turmoil, but also something that can give you 2 to 5% a month, and you'll be happy, right? That's how you can grow your capital. Anyway, we got 3%, and then we're back to plus 2, plus 5, and you decide whether to take that profit if you've got a live account or not, or you keep it in there. Plus 4, plus 3, and that's that follow through period. So based on all of the rules and the refinements and the scenarios that I have entered on this month, I end July 2023 with a plus 3, right? Now, if you were trading the power of 2 and you weren't using these filters and you had a hard time, okay, like it's a lesson. Now use these and push forwards, test it. Go and see what difference it would have made, especially during periods where you're trying to sell heavily against momentum or buying heavily against momentum. That's exactly what we created the filter for, and our members are very grateful for it. But thanks for your recommendation on backtesting. Thanks also for the recommendation of July 2023. Of course, we're going to get comments and I'll reply to them. Hopefully you found value in this, and hopefully we look forward to many more videos just like this. Catch you on the next one. Cheers, bye.